Welcome along to the fifth and final instalment of this tax planning video mini-series, which I've had the pleasure of hosting on behalf of Comprehensive Tax Planning, and my guest throughout has been Principal Sean Hughes. And Sean, it's interesting, if we look back over the series, we've kind of been mapping the landlord journey. Landlords start in pre-acquisition mode, then they acquire a property, then they're in the management mode of the property, which is the longest mode that they're in, and then finally they have to think about disposal and exit. And I think it's really interesting just to point out that tax planning in all of those areas is so important, because having the right tax structure is basically building your property business on solid foundations, excuse the pun.
Yeah, absolutely. And I mean, if you've got to change them foundations 2 years into your journey, it's very costly to do so. So you need to make sure the foundations are done correctly and in the right place before you even lay a brick, to use your analogy. So yeah, getting the right advice at the right time is critical.
Absolutely, and I think we've been demonstrating that with some of the things that we've been sharing over the series. Now, up until now, we've really been focusing on vanilla buy-to-let, landlords building a portfolio of basic buy-to-let properties or HMOs. But many landlords, as they grow their portfolio, they start to think about diversifying. And one of the things that has become very popular in recent times is commercial property. And we're seeing a massive increase in kind of big sheds and logistics and warehousing and all those interesting things, which is attracting investors into those areas. And that brings us to the topic of this video, which is capital allowances. And this is a topic I must confess I don't actually know much about. I don't have any commercial property myself, but it's a really important topic for commercial landlords.
Yeah, absolutely. It's not just commercial property. These serviced accommodation, flats, HMOs can qualify for capital allowances.
If you're a freeholder and you own the block.
Correct, yeah. But if we just rewind a second, the kind of rule of thumb with vanilla buy-to-let, as you say, is when you buy the property, the cost of buying the property, you only get tax relief for when you dispose of the property, okay? Now, that's true on all property, but with commercial property, furnished holiday let, serviced accommodation, HMOs and flats, in some instances, parts of the purchase price qualify for immediate tax relief in the year that you acquire the property. And that's what we call capital allowances, okay? Now, capital allowances, the legislation is so broad because it has to deal with so many different aspects of a building. But as a general rule of thumb, where part of the building is the setting, that is not qualifying for capital allowances, okay? Where it provides a function, then that may qualify for capital allowances. So in this room here, we've got that brick wall there. That is definitely part of the setting, okay? In this office, that wall there is a movable wall. So this room becomes bigger when you've got a bigger meeting going on. That provides a function. So that bit of wall, the purchase price allocated to that piece of wall would qualify for capital allowances, and you get full deduction in the year that you buy the property for that wall. Now, these other examples like doors don't qualify, but the handles do, because the handle provides a function.
Air conditioning.
Yeah, that provides a function, absolutely. That's called an integral feature, along with the hot and cold water system. Lightings qualify as well. So it's really not that interesting. But those bits and bobs can mount up, and the tax relief that can be made on these claims when you're buying a commercial property or other properties we talked about earlier, they can really mount up. And again, it's just about the landlord being aware of that, and when they do buy a commercial property or a furnished holiday let or anything like that, just bearing in mind that that purchase price, you can maybe get some relief for it in the year you buy it. Just go to somebody who does capital allowances claims. We work with a quantity surveyor who goes out, values the different parts of the building that provide a function, and then we do the tax advice report off the back of it, and make that deduction on people's tax returns or work with their accountant to do so.
And as you say, it can be quite a significant amount of money, and I would say it's everybody's duty to reclaim as much tax as they can and to mitigate their tax liability as much as they can. So it's really important to know about these things. Is it something that could be claimed in retrospect if somebody didn't realise that they were entitled to this allowance?
Yeah, absolutely. If you still own the property, you can still make the claim. The rules did change in 2012 and 2014 because if you imagine, if one person claimed for that wall in the example, and then they sell the property, and the next person claims for that wall, and so on, and that keeps going, the government or HMRC were paying out capital allowance claims on the same asset over and over again. So in 2012 and 14, they implemented some new rules to kind of restrict that. So now a lot of the time when people are buying commercial property, the asset's already in the property, they won't be able to make that claim because the vendor has to make an election to put the capital allowances at £1 in most cases, so that they don't incur a tax charge when they dispose of the asset. So really, as long as you still own the property, you can make a claim. But in a lot of cases these days, it's when you do a refurb of the property on acquisition mainly, that you can make these claims and they really mount up.
And has that, was there something in the budget that affected capital allowances at all?
Yeah, the annual investment allowance changed again in the budget, as it does most budgets, to be honest with you. Struggle to keep up, but there's always a little bit of tinkering with capital allowances. But the legislation has been as it is now since 2014, and 2001 was the last major change.
It's interesting that landlords aren't aware of these kind of things, because they really are missing out on something that could really benefit them.
Yeah, and again, it just kind of falls between the gaps of accountants in the most part who act for the landlords that I deal with. The accountant is not a tax advisor. Accountants have got a really hard job. They've got to have a very broad knowledge of a lot of topics, but it's normally quite shallow. Whereas a property tax advisor, myself, I've got a very narrow knowledge, but it's very deep. So that's why we do these stamp duty reclaims, capital allowance claims. So it's just going to the right person for the right advice, basically.
And I think throughout this whole video mini-series, we've been really trying to highlight the benefits of working with a professional tax advisor.
We work with people's accountants. So, if it's something that we feel we can do for you, we would come in a bit like a specialist to work alongside your existing accountant. And we don't want to tread on their toes. It's just we've got knowledge that maybe they don't have or don't have time to implement. So we want to work together with people like that to make sure the investor gets the best service all around, really.
Fantastic. So as we close this out, we kind of said at the beginning we're entering a period of stability for landlords in the tax landscape, which I think is something of a relief, because one thing that landlords don't like is uncertainty, and we may hear some new announcements today around capital gains tax, etc. But going forwards, are you feeling fairly confident that this period of stability will continue now?
I hope so. Yeah, who knows what's going to happen. But I think while this government is still in place, and they've got just under 4 years until the next election, probably, hopefully there will be some stability. I think the last budget that Rishi Sunak gave was a really good one, in my opinion. It's relatively stable. Raising tax from companies earning more than £250,000 in profit, which is fair in my opinion. And we do just need, especially in the landlord community, with all the upheaval there's been in the past 5 years, which is been like no other sector that I've seen. I've been a tax advisor for 13 years. I've never seen anything like Section 24. The only thing that probably comes near it is the contractor loan scheme planning that came to a bit of a head a couple of years ago. But that was there was some fairness in that, because the planning was a bit borderline in my opinion. But yeah, no other sectors had anything like this, like Section 24 for landlords. So we've really just got to make get people back on an even keel, really, and hopefully there will be some stability. And what else can they bring in for landlords other than, you're not allowed to own property anymore? They probably can't do much else.
Yeah, I think in a strange way, Section 24, one of the perhaps positive things that you could take out of it is it has made landlords more aware of the importance of tax planning. And it's much more on landlords' radars now. It's hurt them in their pocket. It makes them wake up and seek out people such as yourself who can help them mitigate their tax liability. So just to finish then, Sean, people watching this, they know you're a chartered tax advisor. What are the sort of clients you would like to hear from and the sort of issues that you particularly specialise in dealing with?
Yeah, I'd say on the restructuring point, that's a big bit of our business, and what I quite enjoy doing as well, actually. Helping people save tens of thousands of pounds every year, when we complete on an incorporation or a partnership, that sort of thing. It really does make me feel good that we've helped people save, in some cases, life-changing amounts of money. Yep. So yeah, people, we've got significant portfolios already. Unsure as to whether or not they're in the right structure, get in touch. We'll tell you if you're already in the right structure. We'll tell you if there's something better we can do. We'll tell you that as well. And then also on the stamp duty, anybody who's bought the properties we described earlier in the last video, just get in touch. And honestly, if it's a 5-minute phone call that goes nowhere, that's fine with me. But that 5-minute call might save you thousands of pounds, so it's well worth it.
So that concludes this video mini-series brought to you by Comprehensive Tax Planning, and all that remains for me is to say thank you very much to Principal Sean Hughes for inviting me to host this mini-series. And Sean, obviously throughout the 5 videos that we've covered a wide range of topics, but only really with very broad brush strokes, because as always with these things, the devil is always in the detail. And I think it's really highlighted the value of landlords and property investors really thinking about how they're going to structure their property business and coming to somebody such as yourself, a chartered tax advisor, to get that advice. Yeah,
and what I'd kind of add on to that is every individual needs bespoke advice tailored to themselves. You might have 2 individuals who look very similar in terms of value of properties, number of properties, but if their objectives are different in the longer term, you'd give them very different advice. So, you've got to go to somebody who appreciates that and, can deal with everyone individually.
Yeah, definitely not a case of one size fits all. So that concludes the video series. If you've got any questions or you'd like to know more, please do just get in touch directly with Sean. We will put his contact details underneath the video. But for now, we're signing off and saying thank you very much for watching, and hope you've enjoyed our various topics across the 5 videos. Thank you.